What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a MULN raw price action and statistical update. Before we get started, please make sure to subscribe to the channel, like the video, share it so we can get some more people who are interested in learning more about the trade in here. Okay, you guys, with that said, let's go ahead and begin. Yesterday we were talking about potential bull trap. There were three potentials that we actually talked about. We talked about potential number one being here, potential number two being at the 1.618, which is the one that I actually thought was the most likely to happen, and potential number three was the 2.618. Unfortunately, and I do apologize, you guys, but we did get. This is the candle where we were talking about. This is the price action for all today. So we did get with this candle. Let's see, I'm going to put it right there so that you can see that we actually came right at about the 1.618 and used our first fib ratio as the bull trap area. So we actually did we did confirm what we were talking about. A couple things to note here is that we've also noticed that we're in a bearish formation. This is an ascending channel, and it has since realized its true nature. We are currently now the third Fibonacci retracement. We are currently at a resistance, and that is at the 0.236. The reason why we have three Fibonacci retracement tools is based on range. So you're looking at particular to the upper range of, this is the first range down here, but I'm focusing more on this area here. So this fib is focused on the bottom of the range to what was the first day high, right over here, and that gives us a set of ranges for us to take a look at during the following days. The second iteration of Fibonacci retracement is our overall trend. So this is the bottom of this first stage before the second stage here, and it's leading all the way to the high of that range. So bottom range, top range overall, right? And then the third one was our yesterday's range. So based on yesterday's range high to yesterday's range low, we were able to get these targets. So now that we have another day, we can actually start canceling out a few of them and continue on forward. You can catch my drift on this. Yeah, so we have found support at our spot, our not 236 from the first day, which is right over here. You can actually see that we closed right at it, and we have since recovered and found resistance at the next not 236, which was yesterday's range. Alongside resistances, we are actually trading below the 50-day simple moving average and the 10-day simple moving average. So both of these, alongside the not 236 and 382. The not 382 at about, let's see, 53 cents. These are all going to serve as resistance for us to potentially this low right down here to the not 236 support again. Let's look at the EMAs as well, actually. Let me get the SMAs out. Okay, so yeah, both of the 30-day exponential moving average and the 7-day exponential moving average. First of all, the 7-day has now crossed below the 30-day, which is bearish, and we are using it as a form of resistance as well. So many things against price action continuing on to the upside for the immediate short term. We are in the hourly chart here, so please bear that in mind, you guys. Okay, so there is something very interesting here that has popped up, and I very much would like to share with you guys because it is a bullish statement for MULN stock. So now if we take a triangle tool and take this top range and draw a trend line in this manner. Let me see if I can get it to be about here and draw it to this point. Yeah. Okay, now let's make some quick adjustments on this trend. Okay. So this after an uptrend, I know it looks a little wonky. I don't want it to be forced whatsoever. So yeah, that's about it. Okay, so yeah, after an uptrend, this can be considered two different things. This can be considered a pennant. It's a bullish formation, and it's also a consolidation formation. So these consolidation and pennant are both bullish formations for MULN stock at the moment. Now, triangles like these tend to realize to the upside when we're more or less at about 70% complete, usually at about 3/4 complete, 75%. So in this case, we're at about 55% complete, possibly touching 60 right at this point. So we still have some time and some range trading to do within this triangle. As we approach closer to the apex, then we can actually start to see some upside action, and at that point, we can then start using this desired area, the golden mean, the golden ratio, 1.618. So I think that's going to do it for this chart. Let's go ahead and move on to the next one. This is going to be the statistical side of our analysis thread today. And I really wanted to perform this for you guys because there are more metrics to look at here. Yesterday, we were looking at a potential bearish setup, but today's price action really changed everything, almost everything all around. So it actually flipped me from being partially bearish into mostly bullish now for MULN stock. And just like yesterday's analysis, we did talk about the negative iterations of what we looked at in this note structure here. So we noted that we had a total of 21 iterations based on a criteria that we were looking at in momentum versus volatility profile. And based on that criteria, we noticed that 9 of those iterations out of the 21 were to the downside, were guessed to the downside. And the downside led to about a 42.85% average downside. Let's see. I'm sorry, it was a 42.85% accuracy that we would go to the downside. And the average downside thrust would be a decline of 93.47%. Over the span of about 24 and a half days. Now, I did mention that it didn't seem too likely for me because it was just so it was just such a low number. It was suggesting at about 3 cents, and that doesn't even make sense with the price action happening. My discretionary side is opposing this statistical side. So what I ended up doing is that I recounted every single iteration now to the positive side, which is why you see green iterations versus red iterations. So I did take the metrics for the positive iterations. Again, I'm going to explain how I did that in just a sec. Now, out of the 21 total iterations, similar to the bearish side of things, 12 iterations are to the upside. So that gives us an average upside accuracy of 57.14% chances that we can go to the upside. Naturally, it's higher than the bearish side. We have an averaged upside thrust of about 172.12% to the upside. Over the span of about 13.7 days, 13 3/4 days. This is proof of work for you guys to look back. And now I want to be able to show you guys just what would happen if we did apply the statistical metric of 172.12% to our current price action. Before I do so, and before I begin to explain these things, know that these are statistical metrics and they are not certainties. I use an averaged mean using mathematics so that I can be able to gain some bias and direction, and also targets, desirable targets that we should be looking at, right, you guys? So now let's let's get down to the nitty gritty here. Okay, so what you're looking at in this indicator here is volatility, represented by this indicator BBWP. Volatility is direction neutral. So only because we're at extreme expansive levels up here and starting to contract to the downside does not mean that price action will continue to the downside. Inversely, only because we're contracted all the way to these lower levels does not mean that we would go to the upside when we start trending up on this. Hence the direction neutral comment I just made. Now, what we can do is pair this with a momentum indicator. So this is a momentum oscillator called stochastic momentum, right? This gives us the overall bias in the direction based on the volatility profile. So this is a momentum versus volatility signature, or a profile, right? So this is what I measured every single time we have reached the critical areas of volatility, meaning that we have reached above the 90 percentile of volatility. I have taken a count of every single iteration by hand and measured the thrust of upside or downside and duration of each iteration, and came up with these came up with these averages here. So now that you know exactly what I'm doing, let me go ahead and show you what happens when we do apply these metrics to it. So first of all, let's see. Okay, so this is going to be the upside thrust into the statistical measure of 172.12%. It takes us to a very desired area. So it takes us to the 2.618. The 1.618 is our golden mean. This is the golden ratio. People usually tend to take the trade to the 1.618. It's inverse, not 618. The 2.618, the 3, and the 4.618. That's usually where we like to take the trade. So it is very interesting to me that from our current position, the average mean is taking us to the 2.618. Now, the difference between and they are confluent, but the difference between them is 4-cent deficit. So we have 136 and about 140 or 141, right around there. So because of this, we can now draw a resistance range. So now as we start looking back for confluent, or confluent uses of this resistance range, you can see this candle right here touching right at the top of that. You can see these candles right here using this as a form of support. This candle here support. That candle touching right at the resistance range right here. You can see other candles touching right at it. We're trading within this range. So this is very likely a desired target. So we can consider this to be a point of inflection. And now point of inflections can be described as a key resistance. So breaking out of this resistance and then finding support on it can have us validate a continuation to the upside. We are, however, 172.12% away from that. So, and we are on a 12-hour chart. So this is likely to take some time unless we face impulsive moves like this and FOMO kicks in which case there's no indicator or there's no psychological metric for us to be able to measure or follow FOMO. When you do find one, please let me know, because I'd be very interested in knowing what that does, right? Okay, so also just one more thing here. This the high of this range is very reminiscent to the July highs that we faced here. We had a massive run from 90 cents to $1.44. So this was a great rise, and it has direct confluence with the highs of that period in July. Okay, so now let's go ahead and move on to the next chart. Now that we're done with the statistical metrics of this analysis. Okay. Yesterday, we had touched on the possibility of a huge 12-hour hidden bearish divergence. So this is the divergence happens when the RSI is making a high here and then a higher high with price action making lower high. Now, I have found, based on today's price action, I have found an even bigger bullish phantom drive of bullish divergence. So this is actually from here to this point here. So if we do start, see, this is a hammer now printing in the 12-hour chart. So if this prints as a hammer after a downtrend, this is a signal that we're going to go to the upside. And it is in accordance with this huge bullish phantom drive of this phantom drive of bullish divergence. So this could signal a potential upside once again. Don't hold me to it, because the thing is that we are also looking at a bearish cross here of the RSI. The RSI signal now is below the moving average here, so that's usually not that good of a sign. For the new listeners, please listen up. I apologize to my regular listeners. I do have to explain this. The RSI is a basic setup here. I have split the RSI into two halves. Now, the upper half being the bullish control zone, bottom half being the bearish control zone. We have the lower half of bearish control zone is bear strength percentile, and this upper half is bear weakness percentile. Inversely, we have the bull weakness percentile and bull strength percentiles. So anything above 70% is oversold, anything below 30, is overbought, and anything below 30 is oversold, just like any other RSI, you guys. So this is actually my RSI that I coded myself so that I can be able to have these indications for better control or better price action in my trading strategy, right? So let's go ahead and start looking at now a larger pane here so that we can see more RSI timeframes. Let me just go ahead and do this real quick, you guys. Okay, so let's start with the 30-minute RSI. This is going to be immediate short-term time frame. It is suggesting a continuation to the upside. However, it is within bear weakness and a little biased towards the bear strength percentile. Now, we are trading below the moving average, which can be used as a form of resistance and a continuation to the upside, to the downside. However, it is still pitched to the upside. The pivot is still suggesting a continuation. So let's look at the more immediate short term. This is going to be a micro time frame. It has crossed. It has made a bullish cross above the moving average, and it is now within bear weakness percentile. So as it gets into the shallow areas, we are more likely to be gravitated towards the bear weakness, the bullish control zone up here. So immediate short-term time frames are suggesting continuation to the upside. Let's look at some other time frames. This is going to be the bi-hourly, and the bi-hourly is now pivoted towards the upside. However, it is still in the shallow areas of the bull weakness percentile, so we can be gravitated towards this downside here as well. And you can actually see that there is a potential trend line regression rejection type of scenario happening here. So we can use the moving average in accordance with the trend line here and continue on to the downside. But don't take that to heart just yet, you guys. The upside is still present and it is suggesting as such. So let's look at the 4-hour now and see what we're doing. The 4-hour is failing the bull strength percentile, and the moving average is also pitched to the downside. This is suggesting some downside, and it is in the deep areas of bull weakness. So with an impulsive price action, we can recover up to here, to be perfectly fair. Let's go up to a higher term time frame. This is the 8-hour retracing from overbought percentile, has made a bearish cross actually below the moving average, and is suggesting the downside. This is a nosedive, so this is definitely suggesting some downside. Let's look at the daily and see what we got. So the daily is within absolute bull control. It is suggesting a very, 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 very slight downside pivot. The moving average is about to move into the bear weakness percentile, is very likely to move into there, but the daily is suggesting upside still. The buy daily is has just crossed into the bullish control zone, but with a downside pivot, it's probably likely to come back into bear weakness percentile. 3-day is continuing an upside. We're still trading above the moving average. That's good. The 5-day RSI is suggesting a slight upside and trading above the moving average and within a very shallow zone of the bearish strength percentile. So this is likely to come up. There is a bit of indecision in the overall spectrum of what I'm looking at for the immediate short-term time frame, you guys. But I am not going to suggest any entry. Well, first of all, is because I'm not a financial advisor, and I actually can't suggest for you to buy or sell any assets. Please take what I do show in these videos as a form of entertainment. But you can always reach out to me, you guys, and we can discuss further. But yeah, you guys, I am not going to suggest any type of entry until we do get this pennant more, we need to fill this a little more and get closer to the 75% of the apex before we start making some actual moves. That would probably suggest entry in let's see, we are on the 27th, possibly by, if we can do tomorrow at about 48 cents, 49 cents, that could be a really good area to start accumulating here, you guys. So this could be for a long position, and we can actually see the target, the implied price objective of this. So we just take a trend line from the hypotenuse, the top of the triangle, to the lowest point of this triangle, and take that trend line, and let's just say that we were to break out on the 28th right here. So very interesting, you guys. The trend line is stopping right at our 2 spot, 618, and it's a golden ratio. So that is very, very cool. Let's just look at okay, we don't have any relevant time frames in that area, but it's just ridiculous how it would land right there. So yeah, you guys, I don't suggest entry just yet. Let's wait. Let's be patient to maybe tomorrow, sometime in the session, where we can reach at about a 49-cent level before we can enter for a continuation to the upside. Please make sure to use risk management and stop losses. Stop losses are there for us to be able to survive the next day of trading, right? But that is going to do it for the video tonight, you guys. If you have any questions or concerns, please don't hesitate to reach out to me. I'm going to leave the links at the bottom, below, so that you guys can be able to join the Discord. Visit me on Twitter, which is, there's a lot of people there. The Discord is starting to get full, and a lot of attention is starting to come into the YouTube channel. I apologize if I haven't gotten to your request just yet, but I will. I'm trying my best, you guys. It's just I've never really done this before, and the YouTube channel is only like 14 days old, and the Twitter's 5 months old. The Discord's like, what? I think it's like 3 weeks old. I can't even apply for anything in it, but I'll try to get to you guys as soon as possible, you guys. I promise I mean the best for you. But yeah, that's it. I have nothing else to say. I will catch you at the bell. Adios.